Hello everyone, Philip from Black Bull Markets here. In this video I'll be taking you through how I personally trade the head and shoulders. Now the head and shoulders is a very common pattern in technical analysis. A lot of people have a certain way of trading it. I trade it a little bit differently to the majority of people. I feel there is not an easier way, there is a better way of getting a bit more profit out of it. You can score a little bit more of the move to the down or upside depending on which way the pattern forms. So I'll just be using our Black Bull MT4 MT4 platform, just using the tools to draw you this pattern. So I'll just quickly take you through this. If you guys are a little bit unsure of what the head and shoulders is, I'll just quickly show you what it looks like. So we can see the market makes a move to the upside. This is just an example of a bullish market. So the market makes a move to the upside and then comes down, does a little bit of a correction, and then again it moves to the upside. So it breaks past that previous high. So you can see this will be called the left shoulder, and then this will be the start of our neckline. So another move to the downside then confirms our head. So this is then the left shoulder, and this is the head. This move comes around about to the same level as this previous, the start of the head. And then we have another move to the upside, coming around to the previous left shoulder, and a move to the downside. So this then creates our right shoulder and the finished pattern. So this is what a head and shoulders in perfect conditions look like. It is a very profitable pattern to trade. It is quite common as well, but in this video I'll just be showing you how I trade it, so we won't take too long on this video. So a lot of people do trade this. How they trade this pattern is they would have a line connecting these two necklines over here, and then they would trade it as soon as this pattern breaks, or the move down breaks this neckline over here. They would then usually take their profit around about 100% from the neckline to the tip of the head. I'll just quickly show you so you can see that I just use a Fibonacci because it's easier to draw and just a bit easier to show you. So I'll show you, let me just quickly change the setting on this one. There it is. Great, so you can see, so they would usually put their take profit around about here 100% of the from here to here. And they would a lot of them actually put their stop loss over here, which I'm not a big fan of that. Sorry, so the break comes here. My apologies. So the break comes here, and they would put their take profit here at the 100%. Now, the first reason why I don't like this, the take stop loss, is actually because this gives you a 50-50 trade. And I mean, this is, for me, it's a little bit silly, because you're risking 50, it's a 50-50 trade. It's you might as well go to the casino and gamble on flipping a coin or something silly like that. So we want to, in trading, you want to make your risk as little as possible and make your profit higher than the amount you win higher than your risk. So you want to have a high reward ratio compared to a low risk ratio. So some people actually put the stop loss over here. I also put my stop loss here, but I'll show you where I actually enter the trade. I'll quickly take you through that. So how I wait for this pattern. If I see this pattern forming, I'm sort of expecting a head and shoulders. Then obviously I'm not always right, but I mean this is what I'm looking for. I'm looking there for a head and shoulder. So I'd wait for this move to retrace to the previous the previous left shoulder, excuse me, over here. And I would actually, depending on if the pattern looks like this, if it looks perfect like this, I'd actually enter it as soon as the candle closes below, or even with a wick above that. The candle closes below the line with a wick above the line, doesn't matter. But if the wick's below the line, that's fine too. I would then enter a trade here for a short, and I would put my stop loss just above. If I go long, I would put my stop loss just above the highest point of the two shoulders. So if this one was a little bit higher and it started moving down, I would actually put my stop loss just a little bit higher above that point. So the reason for that is it just depends on how big my spread is. If I've got so I just give it a little bit movement room for my spread. But yeah, that's how I would enter it here with two trades. So I take trade number one and then take trade number two on the exact same spot, and I put both stop losses there on the same side over there. I would then put my first take profit over here at this neckline, and then wait for the market to move down. So as soon as it comes in here, I'm in the green, and it'll hit my take profit over here. And then the next take profit I always use take profits because it's just usually when I'm not on the computer, I always make sure that I protect myself, lock in profits. When I am at the computer and I can watch the markets, I would usually take profits away, and I would manage it. I would risk manage it the whole time. But like I said in my previous videos, I don't like spending too much time in front of the trading screen. It just gives me a bit more time to do personal things, and it's a bit more relaxed. But anyways, we'll get back to this. So like I said, my second take profit, I do the same. I put my take profit. Here we go. So I put my take profit at the break here, and I'll then put it at 100%. So this is where my second take profit goes. So I've entered with 2 trades. Obviously, so if you would enter with 1 lot, you would then split it in half. So if you were going in, for example, with a, say, 1.0 lot, you'd go in with 2.5 lots. Sorry, so 0.5 lots. And then so your first take profit would be here. That secures the first pips down. So now you're trading. I always call this trading with the market's money. So you've already made the money here. I would then manage it, pull my stop loss in a little bit closer so that I'm in the green for this trade coming down, and then I would just ride this one out all the way to the bottom. So you can see, instead of making just the money over here, so the pips over here, so here you would have made 130 pips if you traded it the normal way, how the majority of people traded it. But the way I traded it, I would have made, so the first one I would have made around about 70 pips, 69 pips, and then all the way down to, I would eventually make 200 pips in the end. So instead of making, I forgot what I said now, instead of making 130 pips, you made 200 pips, which is almost double the amount. So that's just a little bit of insight of how I trade the head and shoulders pattern. I feel like this is too much precious movement to waste in the market, so this is why I enter it over here. Obviously, I'm not always right, but it gives me that bit of more movement and a bit of more profit to take home at the end of the day or the end of the week, whenever that trade closes. So that's how I trade the head and shoulders, guys. If you've got any questions, please feel free to contact me with a link. My details will be provided below in the video. If you like this video, give us a thumbs up, and also please click the subscribe button if you want to get notifications of whenever we release any new videos. And also, guys, if you want to, like I said, if you want to chat, hop online to blackbullmarkets.com, have a chat to our friendly live support team. There's a little green button that says live chat. Click on that, and we will respond to you as soon as possible. Well, from everyone here at Black Bull Markets, thanks for watching, and enjoy the rest of your week, and safe trading.